Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the NDX, which is the Nasdaq 100 index. We're going to be bringing our Elliott wave count up to date and then discussing some basic technical analysis as well. Right, so first things first, I brought the NDX count into line with the SPY count, which I did a video on last week. Upset a few people, having changed my mind about the primary wave degree, but I'd rather be free to change my mind than stick to my guns against new data or new evidence. So, getting back to the point, I want to start by looking at a simplified chart, or a nice simple chart here on the Nasdaq to bring you up to date with the count, or a simple premise of the count. And this is the idea that we are in a wave 3, primary wave 3, could be concluding soon, today, next week or so. Evidence to suggest that we're getting near the top of it. Like I said last week on the SPY video, when people were calling the top of the market, I said we're likely going to have a temporary little pullback, but then we're going to push higher. Still expecting a major market peak in the summer, which I've been saying for months, but I just think it will be a peak around the primary 3 rather than the primary 5. But if we see evidence to the contrary, we have a total collapse in price and support over the next couple of weeks, then I'd be open to changing my mind again. So, to sum things up quickly, we've got the geometry of the SPY, which we're applying here to the Nasdaq, which is essentially this pitchfork here. Now, what's quite interesting while I've been preparing to record this video is using the same 1-2 pivot of primary degree. We have our 1, 2, 3, 4, 5 intermediate waves in it. We've come up to a perfect test of the median line today. Now, it doesn't necessarily mean the top and the 3 is in. My count doesn't necessarily have it in yet, but it is a possibility. We've come up to the median line, tested it. Now, as you can see, the median line here has been significant before. We had a test of the median line here. We had another test of it here. We basically channeled around these 38.2, 38.2 either side of the median line here, support and resistance. So it is significant. And today, we can see that we've had just a little test here and we found resistance. Just so happens that the median line touched today coincides exactly with 15k, exactly 15,000 on the Nasdaq, and we just turned around. Currently, 8-hour chart putting in a bit of an evening star at the moment, or actually no, more of a shooting star I should say, sorry, wrong way around. So we'll see how this candle closes today, but it could be a reversal candle. So we'll have to wait and see. Let's just come off of the brush tool for a minute and hide the pitchfork. So in the shorter term, we've been working with this channel. Now this is the same as it has been in every previous count. We've been working on 1, 2, 3, 4, and looking for a 5. Traditionally we place it at the top of the channel, but in this circumstance I'm willing to consider an earlier completion. Not saying we have, but willing to consider it because I'm not using Elliott's first method, which is the joining of the 1 and the 3 to find the 5. The reason for this is because the bottom of the channel would cut through too much of the price data that I've included in my wave 4. So I've gone for the second method that Elliott suggested, which is joining the 2 and the 4 and projecting from the 3. So this doesn't always result in the top of the channel, while the 1 to 3 doesn't always as well. It's just more likely to do so. So being a bit more flexible there. So that's basically the rough idea. We've done a 1, we've done a 2, we're in a 3. 3 could be concluding soon, and then we're going to have a larger correction in a primary wave 4 during the later half of the summer into the autumn. And it could be longer, could be shorter, but essentially the cutoff for that correction is all the way back here. Back at the peak of, I've got that locked, let me just put the magnet on it, I haven't quite got it to the tick. There we go. This white line represents the cutoff for this primary wave 4 correction, as it would invalidate the top of wave 1, that would be an invalid wave 4. So you can see how there's a lot of room. If we started correcting today, there's 17% between us and the invalidation point. It doesn't have to come anywhere near that low, of course. If we were to start correcting from the edge of the channel, that would give us even more like 20% to play with potentially before invalidating the count. So we could have a violent turnaround still at the peak in the summer as I've been suspecting, and it could be a very deep one but still have the bull market perfectly intact. Okay, unless we invalidate all the way back here at 12,439.48. So I'll tell you what I'm going to do, since this is a nice simple chart for us to keep track of. I'm just going to pop a price label down here as well. And I'll lock that in place. So now we're going to come over and have a look at the more complex count, just to update on recent price data. So let's come in, zoom in, have a look at this. We're on the 2-hour chart at the moment. So the question here is, have we gone 3, 4 minor time frame and now 5, let's move this out of the way, minor time frame, completing the 5, completing the 3, which would now result in a substantial pullback of a beginning of a primary wave 4. It's possible, but it's not my preference. Given the count I've got here, I think we're putting in a minor 3 now. We've had 5 waves up here at minute degree, so maybe a 4 now, and then we're going to push up into that 5th of the 3 to come over the coming week. So let's just have a look how that would appear. Something like this, going up into the 5. So let's just make a few projections. We're making the assumption for the moment, could be wrong, which could continue pressing higher the rest of the day and into next week, but just assume for a moment that we've put in at least a minor wave top here. We have 1, 2, 3, 4, 5 minute waves. We have nice subdivision within the 3, so you know that's good enough to make that assumption. So what would we be looking to retrace? Well, how much would we retrace of our wave 3? If we set some targets now, then we can keep an eye on whether or not we transgress through them. So 23.6, and do tend to get very shallow wave 4s, well, not any very shallow wave 2s as well in this bull market. The Nasdaq has just been so strong, it's phenomenal. This whole time just keeps pushing, and even though we're recording at the moment higher, I mean, I'm not sure if you pay attention or if it's really worth paying too much attention to the greed and fear index, but we're actually recording quite heightened fear readings at the moment as the market continues to march higher. It's normally, you know, we normally associate overdoing it with excessive greed, but recently we just haven't been able to get those greed recordings. So here's 2 levels here we can keep an eye on. If we turn down, that is, and continue to fall, this could just be a smaller time frame correction of 3, 4, 5 to push higher. But if it is something a little bit more significant, like a minor wave 3 completion looking for a 4, we've got 2 targets here to look for. 23.6 is 14.643.78, 38.2 is 14.422.23. If we fall further than that, we can look to 50% or 61.8% for a potentially deeper wave 4. However, obviously we can't transgress beyond our wave 1. This would be our invalidation point down here. We would not expect to go beyond this unless we've completed something more significant. If we do, then we can start looking at the possibility of having completed something more significant. In this case, the argument would be that this was 3, this was 4, at a minor degree, completing the 5th, completing the 3rd, and a more substantial correction is now underway. But very early days here. We've just got a small red candle here on the 2-hour chart. Far too early to start calling that yet. So we primarily want to see on a smaller time frame, we want to see a 5-wave move down, a 3-wave move back, and then follow through after that reaction. And then that could either be a zigzag, as we had a flat correction in our 2, we would be expecting a zigzag here in the 4, if this is the 4. So a zigzag would be the most likely correction. So let's just try and channel this for a moment from our 1. Now that we are assuming we've got a 3, we're jumping the gun a little bit, but that's puts the 23.6 at the edge of the channel here. It doesn't have to stay within the channel. It can break out and we can adjust once it's completed. But just in the meantime, assuming we channel with the 1, the 2, 3 and the 4, then somewhere around this neighborhood, a zigzag down to the 4 before pushing up to complete the 5, I think would be quite likely. Okay, so That's the more short-term price data updated. So we're just looking to see what it does. This follow through for the rest of the week? Do we have some kind of sustained downturn, or is this all? By the time you're watching this video, we could already be higher, since this won't be out for a few hours until tomorrow. So, right then, I think that's enough for the Elliott wave count. So let's just move over and look at some basic technical analysis first. And just before I do that, I'm going to clear the chart here. I just want to pop over and have a look at the VIX as well, because I mentioned it in my last in the SPY video, and somebody wanted me to bring it up again, essentially, because I was talking about how drawing multiple wedges on this is kind of a waste of time. I was probably being a bit harsh. It's not a waste of time, it's just impossible to time, is what I should have probably said, because these wedges appear once they're finally complete and they break out like they were obvious, but when you're in them, it's not obvious. We have highs, lowering highs, and we could draw this trend line a whole multitude of ways to try and give ourselves some sense of confidence or assurance that we're analysing some kind of falling wedge. I still feel that this rising trend line, which shows the breakdown in January 2018, the taper tantrum of the December of that year, and the you-know-what disease breakdown here, all bounced off of these lows first, and we're now back at these lows. I find that a more compelling argument that we may wander around for a little while, as we've seen before. We've got sections here, you've got areas like this area here, where you wander around for a little while before you make any significant move up. So we could do that. If we do break higher suddenly in the VIX and things start to become more volatile, and then a break above this descending trend line and this previous dominant high here would have me more convinced that we're going to have some kind of follow-through move higher. So need to see that trend line broken first, and this previous high on the trend line would have me more convinced. These previous highs, not really. We've got to get out of this downward trend, I think, to be more confident. Alright then, so let's come back over to the Nasdaq and let's bring up our exponential moving averages on the weekly time frame. We have 10 in yellow, 20 in blue, 60 in orange, 250 in green. We're also going to bring up our momentum indicators here. At the bottom we have an RSI set to attain close, green 30 level is oversold, red 70 level is overbought, and we also have a MACD with a 10 for the short term moving average in blue and a 20 for the long term moving average in orange. Okay, so what can we see here? Same old story. Above the 10, 20, 60, 250 have been on the weekly time frame for basically what feels like forever now. In terms of the 60 and the 250 at least. We have tested the 20 a few times, but as you can see we have been determined to body the candles above it. We've wicked through it, but we will body the candles above it, a sign that we're still in very much a bullish disposition. So a long way from a 250. I think really looking at the entire bull market going back to 2009, we're seeing levels of extreme move away from those long-term moving averages which we haven't witnessed before, also supporting the idea that we're in that fifth and final cycle wave. We're blowing off, we're having a bit of a melt up. Right then, so RSI, bears are going to be disappointed with me here as well. I was talking about the divergence on the RSI a few weeks ago, around the week of the 24th of August, and then we had a series of lower highs, 24th, 4th of Jan, 12th of April, high, lower high, lower high, 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 big divergence building up for months and months and months in the Nasdaq, and that's what we got. Teeny tiny sell-off. And now we've set a new high in the RSI back at overbought levels, cancelling out all of this bearish divergence prior to this high, which we're almost taking out as well, which I would argue shouting divergence from here to here after having a freeway divergence here conclude is clutching at straws, to be honest. Now, you might take some confidence, however, if you're more bearish from the MACD, because we still do have a strong negative divergence here on the MACD from a high, lower high and lower high with high, high, high and higher high. So perhaps the RSI, we've been elevated since the oversold condition, overbought to oversold here back in March 2020. We haven't even got really too deep into the neutral zone. So RSI is just so elevated that perhaps if we're looking for any kind of bearish divergence, the MACD might be more reliable. This does suggest we are weakening as we climb, and momentum will run out sooner or later, and we will top. So into a 3, into a 4, into a 5. We'll have to look on the RSI for more recent time frame divergence on the smaller time frames in the days and weeks to come. Do we drop and then make another high with divergence? Do we drop significantly into that 4, into that 5 and get divergence? These will all be signs that we will need to be looking for. Let's come down to the daily. So above the 10, above the 20, above the 60, above 250. Short-term divergence here on the day time frame. If this is a high, we do have a shooting star candle on the daily at the moment as I speak to you. I do not know how it's going to close, but it is a shooting star. We have a divergence between the high on the 7th of July and the high on the 12th of July. And today, obviously, we're setting another lower reading on the RSI. So we do have some divergence on the short term. Bullish momentum on the MACD waning, but this has been a very strong move on the daily time frame, taking us back to previous peaks. This has just been so powerful, this sustained move, but we are showing signs of rolling over. No crossover for short term over the long term yet. Some darker bars in the histogram, but we're waiting to see that crossover. A little bit of bearish divergence in the short term. If we flush down today and tomorrow, we're likely to get that sell signal here, and then we're just looking for the 5 down, 3 back reaction SCS setup for our Patreons to trade it. You can go short once you've got that setup. I wouldn't advise trying to short it without that setup. You might find yourself sat on top of a rocket. That's why we always use a stop, because it's worse being sat on top of a rocket than it is trying to catch a falling knife. I wouldn't advise either. Falling knife might just take your fingers off. Whereas a rocket might send you out into space without a spacesuit, and we don't want to go there. So there you go. Interesting. We have got this set up at the moment, looking like we may be topping. So, quick reference back to the count. I'm saying that this is a minor wave 3, topping out, looking for 4, then 5 to come higher. But it is possible that this could be the bigger 3. We will know within a few days and a week or so. We'll see. We'll know from the price data. Alright then guys, that's it. So if you're new to the channel and you like what you've seen, please subscribe, smash the like button, leave us a comment in the comment section below if you want to, hit the little bell notification icon to remain informed of future video releases, and as always, thank you very much to my Patreon subscribers. Your support is greatly appreciated. If you're interested in becoming a patron and unlocking all the different benefits from the various tiers, there's a link in the description below. Please follow it, head over and see if there's anything that takes your fancy. Also, if you're not following me on Twitter yet, there's also a link to my Twitter feed in the description box below as well. So go and follow me. Alright guys, all the best, and I'll be back with you probably Friday. Take care. Bye bye.